Yep, we are live. Hi, everybody. We're back. I hope you all voted today, because look, I did. I voted for everybody that you guys voted for. I'm sure of it.
Yep, sure of it.
Okay, Kara. Anyway, welcome. Thank you so much for coming and joining us. Coming to, I guess, your screen. And we have Kelly Frazee, right? Did I pronounce that very fancy? Now, is that a French last name or something?
It is. It is
Where's
French.
your family from?
Well, according to DNA, Ancestry DNA, on any given day.
I think that they recalled a lot of those things, too.
Well, and they keep refining them. So apparently I am British, French, and Italian. Those are that's my jam.
There we go. Just right there.
Yeah.
Right there.
Did you do that Ancestry DNA thing? Like, did you
I
pay
did.
to have it done?
Yeah, I did.
Oh,
Yeah.
I don't know if I know anybody that has actually done it. Maybe
I
I
know
do.
a lot of
Have you
people.
done- Really?
It's kind of fun. And then I enjoyed it so much that I gave it away as gifts to all the men in my family.
Wow.
Yeah.
Really?
Yeah, and they loved it. It's fun.
Is it expensive? How much is it?
Probably anywhere from $69 to $99.
Oh, it's not crazy.
Oh, that's good.
And it's a saliva test, so you spit into a tube and you mail it off. So
there we go.
It's fun. It's
Spit
fun.
mail. Spit. So we are not talking about that today.
Yeah, we're not talking about that. Side
Just
note.
FYI.
That just allowed people to come on and join us. We have
get in.
one person watching this. So if you're watching this part,
because we forgot to tag people. Can you tag some
people?
Anyway, so we're going to be talking to Kelly, who is with our commercial division at Finance of America. So I thought that it would be good to have her on because we have so many products that I've gone to some trainings and I call you and I email you with questions and sometimes you're like, you've already asked me that. That answer is no. I'm all, can we do a house in Mars yet? She's like, I said no 2 weeks ago. We won't live on Mars.
It's job security.
I'm like, oh, I forgot the answer, so I'm calling. I'm emailing again.
It's fine.
Whatever, at least I do my homework.
That's right.
And if it's the same question for a different person, sometimes things change.
That's right.
They always do in our industry.
They do, that's true.
And we're going to be offering some more products in, like, next year, huh?
That's right.
2019.
We have several new products coming. Our goal is to be a complete suite of products for investors. So we have 4 primary products today, and then in January we're going to be introducing at least 3 that I'm aware of.
Ooh.
Going to be some good stuff coming.
Wow. So a lot of people talk to me because it's named Commercial Division.
Yes.
So it's not like we're lending for all these commercial sites. So can you explain what the Commercial Division for Finance of America is broken down to?
Yeah, absolutely. So the name Finance of America Commercial is a little bit of a misnomer because people think, oh, I'm going to go out and buy a retail office space or a grocery store. I get a lot of requests for churches.
Really?
Yeah.
Yeah,
Wow.
a lot of requests for churches. But really what it is that our loans are commercially underwritten.
I'm not going to buy a church. It might burn down.
Just
FYI.
All our best friends will be there. So what we do is residential real estate.
Sorry, I'm trying
it's
to
okay.
get you. I'm trying to get you not cut off.
Yeah, I need to lean in. So residential real estate for investment purposes. So we have short-term money and we have long-term money. And it's really geared for those people who no longer qualify for Fannie or Freddie.
Okay.
So maybe they want to purchase in the name of an LLC, a corporation. Maybe they're self-employed. Maybe they're buying an investment property that they're going to rent out. Maybe they own too many properties. So we have a lot of products for investors. So
because I see that. I mean, I still see it for investors purchasing houses still in the Bay Area, still some out here.
Yes.
Or actually, some of my investors are refinancing right now because they bought houses with like private loans, and so they have balloon payments that are coming up next year, which means that they have to pay it in full or refinance. So I'm getting still some of those transactions coming. So one of the ones that I was talking to you about this morning is that our cash flow loan.
Yes.
Okay, can you explain that to people so
Yeah.
they can kind of understand what cash flow is?
Yeah, so we have two products in our rental products. There's a single rental loan and a portfolio loan. We don't look at personal income requirements, so we're not going to ask for paycheck stubs. We're not doing verification of employment. We're not looking at tax returns. What we're looking at...
That means no income.
Yep. So
you don't even have
you're
to
not
state that you make
providing
income.
That's right. So what we're looking at is the property debt to income ratio on the property. So principal and interest, taxes, insurance, and association dues divided by gross rent. So we want to know that the rent covers your
all
monthly
those costs.
expenses. That's right. And we'll go up to $1.5 million on our single rental loan. It can be a purchase, it can be a refi, it can be a cash out. We'll allow that.
Ooh, that's good.
Yeah, and we'll go up to a 4-unit multi. Then on the other side of the long-term money, we have a portfolio loan. So there's no property count maximums, no loan max. What we're looking at is minimums on that one. So a minimum of 7 rent-producing doors. And a minimum loan amount of $700,000. So let's say that, Shannon, you own a duplex here in Sacramento, and you want to refi that, and then go out and purchase, say,
another
a
one.
5-unit apartment building in Nashville, Tennessee.
Okay.
You could use this portfolio loan to do that.
Okay.
And it's long-term money.
So, like, you can cash out of my, like, I can cash out of my current and then purchase something in another state, which actually, Tennessee, I was there, and it's crazy.
Yes.
I love Tennessee.
Yeah.
Nashville is a really, really neat place. They've made the whole downtown area so walkable and cute, and there's music and live music everywhere.
Amazing. But so if anybody wants to invest in Nashville, hey, we have a product for you. Yay! So also, we also can talk about our construction.
Yeah, so on the other side of the house, we have our short-term money. So what we do is we underwrite the borrower up front, and then we give them access to a line of credit or an exposure limit for a year. Okay. So what we're looking at are 4 pieces of criteria, and this is in order of importance. So primarily we're looking at experience, then liquidity, FICO, and net worth.
So experience is like if you already own a non-owner occupied like investment property, that's experience.
Right.
So, and then FICO is, what your
credit score is.
But weren't you saying that you take, how does that credit work?
Right. So in the residential world, you guys look at the
mid FICO score.
Right. So we're going to take the highest.
Of all borrowers, the lowest.
You take the highest.
We look at the highest, to establish.
What's the reason for that?
I'm not sure what the reason is.
Because we're lucky.
Right.
That's the reason.
Because we like it. Well, a lot of builders and a lot of flippers are using their own personal income and their capital to invest in these projects. So oftentimes their credit scores are taking hits because there's so much usage, right?
That's
sense.
right.
Yep.
Okay, that makes sense. So that's good. Also liquidity, which means that if they have... Do you take other properties, like if they have $100,000 in, liquidity in the property, as well as 401k and all that? Is that all counted as liquidity?
Well, a little bit. So for liquid assets, we're looking at checking, savings, CDs, stocks, bonds, securities. 70% of retirement. We'll look at 50%.
Like us.
Yep.
Okay.
50% of any unused portion of a HELOC on your primary residence. We'll consider gift funds. So we take all of that and we use, generally speaking, a multiplier of 5. So if you said to me, hey, I've got $100,000 in liquid assets, your line of credit amount would be $500,000. So, and then once you're approved...
times 5.
Yep.
Okay, that's awesome.
Wow.
I wish I could actually do that in real life.
Well,
times 5. Just be like, I have $50. Times 5, I actually have $250. Let's go to dinner.
Let's go to Nordstrom's.
And buy a pair of shoes.
Several pairs of shoes.
So that's good for our construction. And this is for non-owner occupied, so it has to be an investment property.
That's right.
So everything has to be
non-owner occupied. And that's how we get away with no personal income requirements.
Got you.
Right.
Okay. Okay, so let's say somebody is gonna, just for people that are new to this, somebody's gonna look at an investment home or something like that, and you're basing the rent. Does it have to be already occupied in a track history of rent, or are they taking market rates to assess
So
that?
usually the appraiser will get that for you, right?
That's right.
Okay.
So if it's currently leased and it has an in-place tenant, then we'll go up to 105% of market rent. If it's vacant, we're going to use 90% of market rent.
Really?
That's
And
great.
that's established by the appraiser.
Okay.
Because they'll
Great.
like to do a rental analysis type thing.
That's right.
So where are a lot of your business coming from? Is it coming from like Sonoma County?
Unfortunately, I don't have a huge amount from Sonoma County.
Okay.
I think they're still trying to kind of figure it out and just get the lay of the land. I know that the permitting has been a bit of a challenge. So I would imagine that we're going to start to see that a little more
I
frequently.
think we were talking about modular homes.
We
for
were.
Sonoma.
Yes.
So we actually that we can do. It's a little bit of a pain, I guess, for the modular.
So, it's just kind of a unique situation because...
So it's like, okay, so you have a manufactured home, right? Because I've had a couple of people ask me this, and you and I talked about this.
Right.
So manufactured home, it's not affixed to a permanent foundation, and so we have a product that can take that and affix it to a permanent foundation, and so then it can have, eventually have HUD tags and all that kind of stuff, and it can be real property, Texas real property, instead of through the DMV.
Right.
So, but explain how that works
So oftentimes...
for the
with
fourth time for me.
Yeah. Fourth time is a charm. So with modular homes, oftentimes the manufacturer requires full payment before they'll release it from the plant. So at that point...
Because those are built in like big plants.
Yes.
Like in big commercial
Well, and then
buildings.
they ship it, right?
Yes,
they
that's
ship
right.
it to the...
And what we were talking about
To the
before
foundation.
is
Right.
like some of those manufactured homes are amazing.
They're beautiful.
They're
Some of them you wouldn't even know.
You
because
can't
you
tell.
wouldn't
I used to
even
do lending for manufactured homes, and so they would call me the trailer home queen, whatever.
I didn't know that.
Yeah, a lot of
Really?
people know that.
Well, I didn't know.
Because I did the lending and just because of my background.
Okay.
So like there's a whole
Yeah.
different,
You know, the trailer queen lady.
whole different ballgame there. But so when I started to work for this company, that it was like 65% of our portfolio, and I was licensed in different states in the U.S. Like those loans were 500,000, 700,000. Crazy, beautiful, modern.
Because of the land itself, or just the modular home was that much?
Yeah. The ones that I was recently looking at were 500 to 750,000.
Yeah, they're like all
Gorgeous.
windows, and the
Oh
layout
my
is just
God.
amazing. And so I think that actually in the future, that's going to be very, very important.
Yeah, I think we're going to start to see a surge in people buying modular
I don't know if they
homes.
have, because
Especially with the cost of lumber as expensive as it is.
and it's more environmentally friendly too.
Yes, green,
So
solar, all of
so I'm
it.
going to see if they have a magazine called Dwell. I think that they do have that magazine still, and they had amazing things in there. Dwell magazine. Oh yeah, they still have it.
Yeah.
Okay. So
Yeah.
anyway, go ahead and go over that. I got
So,
sidetracked again. Sorry.
modular homes, the manufacturers usually require full payment before they release it from their plant.
Okay.
So that's technically still a chattel. So we won't fund it until it actually gets onto the foundation.
So a chattel is like, what is that definition?
I don't know. I couldn't give you the actual definition.
Okay.
Maybe you could. Maybe
Yeah.
you
Nope.
can.
Nope.
No.
Next.
No.
Next.
Put it on the Google list.
I know it's in one of my test questions.
Totally on a test question.
Oh goodness. Okay.
But I did it once and now
Somebody
I don't
can
do
tell
it.
us what
Yeah.
the true definition is.
There we go. So once it then gets put onto the foundation, then we'll fund it. So, and that falls into the same category as new
So
construction.
then you can,
Really?
okay, so like say they pay $500,000 for this, and we put on the foundation, the permanent foundation, then can they do a cash out?
They can get some money back.
Okay.
Yeah, so we'll go up to 75% of the
Oh,
land's
that's-
value.
That's awesome.
or the
Wow.
borrower's cost basis in the land if they have the permits in hand. And then we'll go up to a max of...
Okay. Oh, we have September in here today.
We have September.
If you can hear her.
And her guys are sleeping.
Her owls.
I know.
She
Well,
brought her owls today.
They're going to be woken up. Okay, go ahead with the land value.
And then we'll go up to 90% of construction costs. So
Okay.
that's pretty fantastic. Or we'll look at 75% of the after build value. And it is a draw process. So there would be an escrow holdback, and then as they complete different phases of construction, they reach out to us and we'll send out an inspector, and so we will reimburse them.
Oh, good.
Oh, wow.
After it gets to, if they have a modular, once it gets onto the foundation, then they're going to start seeing some money back.
Okay.
Right.
So
we
they
just-
go for broke in the beginning, basically.
Well, and it's going to depend on the modular manufacturer too,
Because they might not have
they
to
may
be
have
cash.
some kind of bridge funding.
Okay.
So that might be something, and don't you guys have a new product that's bridge funding?
Yes. Well, so we met with some people for that.
Yeah.
So it's not rolled out yet. I did meet with
It's
a broker yesterday that can do that too, kind of type thing. So, yeah.
Yeah, so there may be a solution.
Okay.
I would always say if you're really interested in doing a modular home, just make sure that you're having a conversation with them to figure out what it is that they require before they release the home from the factory.
Okay.
So,
Okay.
yeah.
That's
So
awesome.
another thing is that comes up all the time because I get questions on it, the vacation rental, which is maybe something that we're going to be rolling out.
Yeah,
Okay.
so right now we don't technically lend on vacation rentals.
Because
So
it's still considered your
it's
residence.
a short term, and we really are more about that long term lease, right, on our long term loans.
Okay.
So for vacation homes,
Give an example of is it Airbnb? Okay.
Yeah, VRBO,
Okay.
seasonal
Okay.
rentals, that type of thing. So
Okay.
Because a lot of people actually that I have done loans with, they have vacation rentals like 4 or 5 months a year in like Palm Desert, Palm Springs, all that area, and it pretty much pays for their mortgage.
Yep, that's
And
right.
then they're different times of
And
the
they
year.
only do it that amount of time a year, but it pays for their mortgage.
Yes, my auntie, that's what she does because she is she's a real estate agent and they travel and she only works for 4 months a year.
That's nice.
Yeah, so
Wow.
vacation rentals are,
They're a thing, for
yeah,
sure.
especially with the Airbnb and
Yes.
VRBO.
Yeah.
It's a huge thing. I've talked to several people who have them. One gentleman, his girlfriend, he finished out the basement of her home, and she was making upwards of $6,500 a month on her
Wow.
Airbnb.
Where was that at?
Up in Portland. She just happened to be in this really great location that was really walkable. So he was like, this is fantastic. And so he did it to his as well. So it really is a great opportunity. So
what is that program?
That's different than what you're talking about with a long
fix and
term.
flip. Yeah. So we have
Yeah.
long term and then we have short term.
Okay.
So in the future, probably Q1
Okay.
2019, we are going to have a short term rental product available. So for people who are doing seasonal rentals, vacation rentals, Airbnb, that type of a product.
Okay.
I don't have a lot of details about it right now.
Okay.
But it
Okay.
is coming, and I'm
To
very
be continued.
excited. Yep.
Maybe we'll have her
Maybe
back
we'll have-
first
when that
quarter
rolls
next
out.
year.
Yeah. It's going
Yeah.
to be a good product.
Yeah.
That's awesome. Now, cross collateralization. We have that in our portfolio product. Can you explain what that is?
Yeah, so let's say, and we touched on it a little bit. So let's say that you have a duplex here and you want to refi that duplex and then you want to take those proceeds and go
purchase something
buy
else.
something else in another state, here, locally. That portfolio loan product is really a great option.
And you just have one loan.
Okay.
Yeah, for all of your properties. But it is
Wow.
a minimum
Yeah.
of 7 rent-producing doors and a minimum loan amount of $700,000.
Okay.
Right? So you
Okay.
could have 25 duplexes in there as long as you meet those minimums.
You have to have
Okay.
7 and
Yep.
700,000 minimum.
That's right.
Okay.
We'll go up to a 20-unit multi on that product.
Okay.
So that's really good. Our single
So what
rental-
would a 20-unit multi be, for example?
so it might be an apartment building in
Okay.
Florida or Minneapolis or the Bay Area or here in Sacramento. Maybe it is in Chico. It can, 20 units. I see a lot of them in Las Vegas.
Okay.
Yeah, a lot of 20-unit apartment buildings there. So Yeah.
And you're going to be there this week, huh?
I am.
Las Vegas.
I am. Viva
Doing some
Las
loans in
Vegas.
Las Vegas.
I always can tell when there's been something announced about the Raiders because I get all kinds of investor calls.
Oh, really?
Oh, it's really fascinating.
Really?
Yes. I can always tell when ESPN has announced something like they're coming soon or they're talking about the stadium because investors
people are
here
trying to get in before
yes.
that.
Well, and like think about when AT&T was built in San Francisco, so that downtown area was just so
revamped,
bad,
and it was completely revamped,
right? And the value of the homes just went through the roof. So I think that people are really hoping that that's what's going to happen in Las Vegas as well. So, and it's still
when are they going to make the
affordable.
decision on that?
I think it's been decided that it's going up. The stadium is being built right now.
Oh,
yeah.
And so, are you getting a lot of investors?
Oh yeah, I have a lot. I have a lot of investors in Las Vegas. It's a really active area.
Ooh, that could be good for like vacation rental, short term too.
Exactly. Also fix and flip. So because there's a lot of distressed areas and a lot of building there. So I have a lot of lines of credit for fix and flip and new construction.
Okay, do you want to explain what fix and flip is
for
people that don't know?
Because I get a lot of calls too for questions, people asking.
It's my favorite product, quite honestly.
Okay.
So we underwrite the borrower up front based on experience, liquidity, FICO, credit score, and net worth. And then they have...
Again, no income requirements.
That's right. We're
Yay!
looking at...
Which is crazy.
We're not looking at your paycheck
That's
stubs.
crazy.
Yeah.
Okay.
We have 4 different tiers. Tier 1 is going to be what we affectionately refer to as the I watched HGTV this weekend.
That
loan.
means no experience.
That's right. I mean, none at all.
Yeah.
Well, you have to start somewhere.
You have to start somewhere.
Exactly.
Okay, so what's happening? Let's say someone is in that tier 1 and they're calling you and saying, I think I want to buy a distressed property and flip it.
Fantastic.
What is your next, what do you say
What's
to
the
them?
next phase?
Yeah, what's the next
So
phase?
I would first find out, what kind of experience do you have? None? Okay, that's fine. Then I would find out about their liquidity. How much do they have in liquid assets?
Cash, 401k, all that kind of stuff.
Yeah.
Okay.
They don't have to have any minimum net worth, but they can't have negative net worth.
I'm out.
Interesting.
I'm out.
Shannon's done. No flipping for you.
But they can have
A single loan. So
Okay.
with no experience for fix and flip, they don't have to have a general contractor.
really.
Think about that. It can be do it yourself. So
That is real HGTV.
That
It
is
is-
real HGTV. I got this.
I would probably have a couple
I've
of
seen
smart
them with a
contractors.
sledgehammer, and I can do this too.
yeah,
That's what
I
that
can
is.
do the demo. Bring on the demo.
Yeah,
But do
the
not
other
ask
stuff
me
too
to pay the
overwhelming.
bill.
No.
Yeah, don't ask me to pay
All
the
right,
bill.
Go to a
So you're
professional.
going, I want to know what your assets are.
Yep. Well, I want
Okay.
to know what you have in liquid assets, and then we'll lend based on that.
And what is that ratio again?
So for tier 1, it's going to be 35% of whatever they have in liquid assets, and
Okay.
then 35% of whatever they're going to do in rehab work.
Okay.
So we make them invest a little bit more upfront on the single loan because it's pretty risky.
That means they have to
Yeah.
invest 35%.
Right.
Yeah.
Okay.
So
65% loan to value.
yep.
Pretty
so, and then at that point, we're going to fund that property, right?
Okay.
So once they get one completed, now they're eligible for the line. of
And what
credit.
time frame is that? What
They get 12 months.
Oh, they get a whole year.
Yes.
And do they have to make any payments during that year? Like
They
how
do.
does that work?
It's an interest-only payment. So what
Okay.
we're going to do is take the max loan amount
Okay.
times their interest rate divided by 12.
Okay.
And so they'll make a monthly interest-only payment.
Okay.
Now, there's no prepayment penalty, but we will collect a minimum of 3 months of interest. So let's say that you're buying a property that just needs some paint and some flowers and just some real light fix
Clean
up.
up.
If they were to buy it in month 1 and sell it in month 2, we would collect a minimum of 3 months of interest.
Okay.
So if it's like $100,000 and it's $600 a month, you'll collect $1,800.
That's right.
Okay.
That's right.
Because of course, as the investor, you have to make some money on it,
That's right. And then you're going to hopefully sell it, right? So you bought it for $100,000, you put in $25,000 in rehab, and you're going to sell it
And
for
that's a write-off.
$300.
That's a write-off
That's where
anyway.
you make your money.
Awesome.
So,
Got you.
yeah,
Wow.
it's a great product. It's my favorite product, I love seeing what these people do with these homes.
I didn't even know, honestly, that was a possibility for newbies.
Yes.
Like, that's amazing.
And you
get
don't have to
started.
prove your income.
Yeah, and you don't
So
have to
that's
prove your
good.
income.
That's right.
Just have a
really
little
good.
bit of
Just
cash
have some
available,
cash.
right?
Yep.
We're going to look for 60 days of asset statements. We're going to take the most current balance.
Okay.
So you would give me 2 months of bank statements, say September and October, and I'm going to
Okay.
look at the October balance. And then for first time, it's going to be like 35% of whatever it is
Okay.
of that amount.
Okay.
For your experienced flippers and builders, it's going to be 5 times whatever that amount is.
Okay, so huge difference. So
Yes.
when you get your first home under your belt,
'Cause it's less
when
risky.
you go to number 2, I feel like that changes everything,
It's a
right?
total game
35%
changer.
versus 5 times.
Right. It's
Wow.
a big
Wow.
game changer. And, they have access to that line of credit for an entire year. So, let's
So
say...
they don't have to name something
so
right
they
now.
don't have.
That's right. So they can get approved up front
Just in case.
Yep.
and then have access to that. Then let's say that they're in the process and they're working on their home number 1 and there's a smoking hot deal across the street. Well, typically they have to use their own capital, but their capital is now all invested in this project. With this line of credit, they could go and acquire that second property as long as they don't exceed their exposure limit. So they can be doing multiple projects at one time.
Wow.
Another fantastic thing about the line of credit is that once they're approved,
I mean, it doesn't hurt to just
Wow.
get approved.
that's right.
Yeah, especially
Because if
for
something
a
comes
year,
up,
a whole year,
If
like-
something happens
Yeah.
to come up in in
A year's time.
6 months or 9 months, whatever. And about how long does it take for once that they're approved? Then how long does it take to close it? Do they have to? They have to have a property, right?
No. So, with a single loan, you do have to have a property identified, right?
Okay.
So we have tier 1, tier 2. Tier 1 is a total greenie, has no experience at all. Tier 2 is all of us. So
Okay.
maybe we've never done a flip, never done a build, but we work in the real estate industry. So property managers, realtors, contractors, so anybody who's in the industry.
You're
brokers.
already kind of like almost grandfathered into tier
Well, we're
2
giving you
because
credit.
of your
Because
Industry
you
experience.
have
Industry.
knowledge.
Yeah,
wow,
your
that's
industry
really,
experience.
That's a lot of people right there.
Well, and the idea behind that is that, so maybe I have worked for a general contractor
Uh-huh.
and I've done flips, but I've never invested my own money. So I know what to do. I know the steps to take.
Okay.
I've just never done my own money.
Right.
So that's going to be tier 2. Tier
Okay.
3 is someone who's done at least 1 or 2 in the past 2 years.
Okay.
We'll also consider rental properties as experience.
So let's say you're in tier 3. What are those numbers like?
So that's going to be 5 times whatever you have in liquidity.
Okay.
And then your credit score will also play a part in what your individual loan terms are. Our max terms are going to be 90% of acquisition plus 90% of rehab or 75% of the after repair value. So those are
great.
max terms.
And what is the maximum loan that we can go up to?
On fix and flip and new construction, the max is going to be $2.5 million.
Okay.
And for our 20, like multi-unit, all that kind of stuff.
So on the portfolio loan, there is no loan maximum. Right?
Okay.
So you could have 87 properties.
You do.
In
Oh
there.
my
I have
goodness.
to
right?
be back.
Up to like 20 million or something like that?
Yeah.
Holy cow.
Yeah, it's a huge opportunity for people. So it's a good product. It's a really good product. We'll go up 75% LTV on that one.
Oh my gosh. Okay, so you guys heard it here. Janelle had to take her daughter September for a little potty break. That's what happens when the daycare is full. That's what happens when you're a working mom, right?
Yep, that just
My
happens.
daughter has gone to so many of my events. Like one of the events, of course, not running for Mother of the Year. I went to a white PCAR event, and I was passing out like so many of. We were in charge of the tickets. She was in charge of entry tickets that people would give her for a
Right.
ticket to get in.
Yeah.
I was in charge of the dream tickets. I think she was 4 or 5. She's like, "Mommy, you're selling so many more tickets than me. Can we change them all?" Sure.
Whoops.
So she's selling all these tickets, and people were trying to negotiate with her. They're like, "I want 3 tickets just for $10 instead of $15." She's like, No, this money goes back to the kids. You're going to cheat the kids?
Don't be a loser.
Smart. Anyway.
How can you resist this little face?
So kids, whatever, they grow up, we've grown up with all of our mountains and all that kind of stuff. That's what gives us our personalities, right?
Yeah.
So if you guys have any questions regarding any of our commercial division products, we went over construction, non-owner occupied, fix and flip,
That's right.
up to $2.5 million, lines of credit, also long-term money. We have short-term products, vacation rentals that are going to be coming out in 2019, cross collateralization that we went over is that you can own a property here in whatever, down the street from your house, and you have equity on the house. You can purchase another house, it's one loan. You can purchase another house anywhere in the U.S., and have another investment property. So that's amazing. Okay. We can do up to 20 units. Mixed use.
That's right. So on our fix
what
and flip,
that means is
so mixed use. Think like a laundromat on the bottom and rental units on the top, or maybe a hair salon or a restaurant. So you'll see them a lot in downtown areas. So on fix and flip and new construction, we will allow for a mixed use. So you can buy an existing building, fix it up, or you can build it. And what we look at is square footage. It has to be 75% residential and 25% commercial.
75%. Okay.
Yep. And we can go up to $2.5 million.
Awesome. That's great. I know they have a lot in Oakland, San Francisco, downtown Sacramento.
That's right.
Like even Old Folsom has it.
Oh, yeah.
So great to learn. Collective experience, all these things. They want to look at collective experience. If you have any experience in it, there's different tiers: tier 1, tier 2, tier 3. Even if you're in loans, mortgage, real estate, whatever, that gives you collective experience there. Liquidity, that's important. With the experience that you have, depends on how much liquidity that you're going to be able to have. FICO scores. We went over the cash flow loan too, which is basically you don't have to show any income, but they will lend based off what the principal, interest, and taxes and insurance is versus the rent that you're going to be.
That's right.
As well. And we went over modular products that we also have too. And so there's some ways to put a manufactured home on a property and then just make it like a regular single family residence.
That's right.
So that was great. I learned a lot. And Janelle's back.
I'm back.
Good for us. So thank you so much. We'll have you back next year too, whenever we hear about the vacation rental. Yep. If you guys have any questions, you can text 33655 to MTG. Yep. Text to 33655 MTG. That's what you want to do. I don't know. I said it backwards. Who cares? Anyway, remember to vote today. Yes. All my girls voted.
Yes, vote today. Except we don't have the little awesome sticker.
I know. I did absentee ballot.
I was reminding everybody this whole time.
It's perfect. I think you should wear it all day.
Anyway, we'll be back next Tuesday. And what do we have next Tuesday?
I
think we're going to actually be on. We're going to be doing a. We're going to do. No, hold on. We're going to do with Jeff of the Water Credit.
Oh, that's right. Jeff is back. So we have
back. Credit is fascinating.
Yeah.
It's good stuff.
Yeah.
My clients learn a lot.
Round 2. So if you guys have questions, if you guys watched, go back. If you didn't watch Jeff, watch the first one. If you have questions, we'll cover it on the second one.
Absolutely. And if you have any questions, ask me regarding all these programs we talked about.
Yeah.
Text to 33655 MTG. That's for mortgage. And then I'll ask Kelly the same question that I probably asked you 65 times. You're like, I
She's
forgot
my job
the
security.
answer.
What did you say again? What was that again?
What's the answer for that?
It's okay. So don't ever feel like you should know it, right?
Yeah,
that's right.
We ask
because there's lots of rules, regulations. So let me go ahead and let me go on the Facebook Live. Thanks, you guys, for joining.
Thank you for joining us.
It was fun. Wait, where is my Facebook Live?
You're on it.
Shoot.
You're on it. It's
right here?
Covered. You're already on it. It's just covered up with
there's
pop-up.
all these pop-ups with posts.
Yeah.
Anyway,
so
thanks, you guys.